Gold imports have actually surged in August right ahead of the festive season. According to reports, a day ahead of the official release of the trade data, imports of the precious yellow metal have surged in August to $4.9 billion. And this is a massive 40% increase over the last year's $3.5 billion. This is also in part due to a rise of 12% in overseas spot prices in the year. Overall, demand in India is forecast to drop this year to anywhere between 650 and 750 tons, the lowest since 2020. The surge in gold imports has raised concerns over India's trade deficit, which is already feeling the heat due to rising oil prices. To discuss the prices of gold and its outlook in the festive season, we are now joined by Navneet Damani, Head of Commodities Research at Motilal Oswal Financial Services. Welcome to the show, Navneet, and great to have you with us. Could I start by asking you to list out some of the key reasons that you see behind the rise in imports that are being suggested in the reports of 40% surge in the month of August?
Hello, Sakshi, and thank you for having me on the show. Well, we've seen the gold import numbers being a little more exaggerated or probably more higher than what the market was anticipating. A 40% surge is something which is not the market was anticipating, because the duty structure is pretty high and the demand at the ground level is not as great as the market or probably the numbers are showing. But however, in anticipation of demand being stronger, it could be a possibility, because as we over the next 3 4 months, we have the marriage season, we have festive season, we have Diwali coming over, and that is a peak season where you see a lot of traction coming in for bullion buyers. Of course, we've seen gold prices hitting highs of about 65,000 on the domestic front, and now currently trading below 59,000. That's a steep 10% fall from highs. So these are some opportunities where I think market participants are finding it lucrative to enter gold as an investment once again. And equity prices are little overheated, and so some bit of diversification could be heading on towards gold, and that is my thought, that is why what we've seen a sharp jump.
Right. Right, Navneet, thanks for putting that all in context. But, I also wanted to understand what the surge in imports really indicates about the current demand scenario of gold. You rightly pointed out that gold prices have seen a dip of about 10 odd percent from its peak. What is the current demand scenario? Are people going ahead and buying gold much higher than what was the scenario earlier in the first half of the calendar year?
Well, the people whom we connect to and the jewelers that we connect to and speak to have not indicated any such great rise in or demand at per se. They are maintaining that the year has been sluggish until now, and probably Diwali could be one big season, or probably the Ganesh Chaturthi festival could be one season where they see some bit of demand rising up, or some bit of pent up demand rising, because all this while we've seen a consolidation in prices or a correction in prices.
Yeah.
And believe me, when there is a sharp correction in prices, people want lower prices and they do not wish to buy it. So if we see a reversal in prices, if gold heads towards 61,000 once again in the near future, you will see a rise in demand. But otherwise, prices are likely to consolidate. The demand is going to be lackluster.
Okay, so what is the demand outlook going to be for the entire festive season that follows? You said that it is going to start off from Ganesh Chaturthi, thereafter Dhanteras, Diwali, we have Navratri also in between. And all of these seasons are really used by all the people out there to buy extensive gold. There are auspicious days as well. So what is the demand outlook for the festive and then the wedding season also coming soon?
Well, the demand, World Gold Council suggests that the demand could be to the tune of 650 to 750 tons this year, which could be the lowest probably the last 3.5 years that we've seen.
Okay.
And to top it up, we've had an extra month where not much of purchases for gold has happened. That's called the Adhik Maas festival. So I think the next 3 months is likely to see some pent up demand. The first half of the year has not been great in terms of demand, but
Yeah.
the next quarter or so is likely to be very strong per se in demands. There are two aspects to it. One, that the market has corrected by 10% as previously discussed, so people will likely get it at a cheaper price than what they could have got 6 months back. And now the prices are in a little consolidated mode, and people started to realize that the dollar USD INR per se has been sticky around 63, 83 levels.
Yeah.
Some kind of diversification could come from equity to other asset classes. That is why probably next 1 2 quarter looks little lucrative for gold prices.
So it looks lucrative, and the demand, the pent-up demand could actually pick up in the festive and the wedding season. Can that also lead to further increase in imports in the months to follow? We are already seeing a 40% surge in imports in the month of August, which just had about 1 or 2 festive, months, festive days. But, in the months to follow, there will be a number of more days. So do you think the imports will also surge accordingly?
Well, the 40% import is because of the lower base impact that we
Okay.
saw in the previous year. So I don't think we should read much into the 40% import number because of the base impact. This number is looking a little bloated. But the demand could be actual and real, and that is where I think a lot of traction would come in, and some premiums could be coming in for the domestic buyers.
What about the prices then, Navneet? You did say that, the prices have been consolidating recently, but with the increase in demand that you expect, will gold prices also surge higher? They've cooled off 10% already from the record levels. Is that going to encourage people to buy more gold in the upcoming festive and wedding season?
Well, Sakshi, we've seen about 30-35% rally in gold prices over the last probably 30 months. And I think most of the triggers which were tailwinds are now starting to become headwinds are facing gold headwinds. We've seen Russia-Ukraine war is pretty much discounted, and until and unless we see a full-blown action once again, it's out of sight, out of mind, and it's not going to impact the prices. Along with that, interest rate cycle has started to peak out, maybe another 25 basis point or 50 basis point hike in the near future, if at all. Otherwise, the cycle is likely to turn most likely as we approach 2024. Inflation has been cooling off. We were at around 9% inflation in the US, and currently we stand at less than 4%, which is also an indicator that inflationary measures have worked and are likely to cool off. Dollar index has been pretty consolidated. So all these factors, which were the drivers for gold prices, have started to now cool off, and I don't see a reason where prices could be headed to significantly higher from here on. So if at all they run up, maybe 3 to 5% rally could come in over the next 6 months, 12 months. But most likely it could be a year where you could see sideways to negative returns for gold prices.
Okay, so if you could break this down a little further for all our viewers to really understand this in terms of the spot prices, the gold prices that they are currently, and how do you see the prices moving by Diwali and then by year end?
Well, as I mentioned, maybe 3-5% upside. So as we are trade at the current juncture, we are trading at 58 500 odd. Maybe in best case we could go to 60 61,000 levels. But I will not be surprised if we head towards 57 500 56,000. Say by probably by the end of the year or end of the financial year 2023 24.
So in that scenario, how would you advise investors to really go ahead? Those investors who may be wanting to invest in gold as an investment perspective. Right now, we have the sovereign gold bond scheme also open currently, which will shut shop tomorrow. For those investors looking at alternate forms of gold rather than physical gold, what would you tell them to do at this point in time?
Well, at this point, the time horizon is pretty critical. If it's a 5 7 years, 8 years horizon, then the sovereign gold makes sense. Investment in sovereign gold, but it's from 6 to 12 month perspective or probably a lower time frame. Then I think investment in gold at this point is not really going to fetch you any kind of return, or probably could eat into your returns as well. So of course, from a diversification point of view, it could be a asset which we would be looking at. But I think it is going to be difficult for gold over the next couple of years to beat even small saving rates of 7-7.5%. So parking some money into bank FDs, into provident funds, and into other asset classes would make sense. For that matter, you could have a counterpart like silver in your portfolio vis-a-vis having gold in your portfolio.
I'll talk to you about silver as well, and we've discussed this many times over that for investment perhaps silver augurs well for investors right there. But looking at the demand scenario, you also talked about that there could be a peak demand, pent up demand coming in the upcoming festive and the wedding season. So do you see that demand surging for the physical gold jewelry when we talk about more for gold coins or bars, or more for jewelry going forward?
Well, as we approach the wedding season, it's likely to be jewelry, but a lot of demand, as we see that there is a lot of cannibalization between jewelry and bars and coins. People have now started to prefer coins and bars because that's an investment where your maximum loss is to the tune of 3% GST that you pay. Otherwise, if you melt it into jewelry, the making eats up to about 8 to 12% of your investment. So I think now people got smart enough to understand that jewelry, if you want to wear it, flaunt it, it makes sense. Otherwise, parking money into bars and coins is the ideal way to approach the market.
So is this the right time to invest in gold? Would you say that current prices are perhaps better off that you start at least buying gold at these prices? Because you said that, even if the markets were to see some dip in gold prices, it would go down by about 1,000 rupees or so.
Well, as I mentioned, I again repeat myself, it's not going to garner you any great returns over the next 1 2 years. So I think you could pause your purchase, or probably you could stay invested from a 5 year, 8 year horizon.
Yeah.
But if it's a tactical investment for a very short term, you could look at alternate investments, and gold is not the investment vehicle where you should be parking your money for the probably next 6 to 12 months.
Okay, so if you have a very short term view, then perhaps gold is not the best place to be in. Perhaps you could look at other alternate asset classes, because we've already seen a very sharp, very swift run up in the gold prices in the recent past, and therefore only if you have a very long term view, then it makes sense to buy gold at the current prices as well. You did talk about silver, so let me touch upon that as well. So both from an investment point of view and both for consumption point of view as well, how would you look at silver from the current prices, and what is the outlook?
Well, Sakshi, on your show, probably in the last 3 4 times you discussed silver widely, and silver rallied by about more than 20% over the last time that we discussed. Of course, we're seeing a bit of consolidation or cool off from 77,000 levels. Silver is trading around 70,500. So it's a straight 9% correction in the last couple of months that we've seen in silver prices. But I think the investment story looks pretty strong. The demand story has been reasonably well poised. The 5G technology story, the infrastructure growth, electric vehicles, solar panel, all these are continuous driver for silver prices. Chinese demand has been missing from the market for some time now, and of late we've seen that Chinese players or PBOC has been taking some slew of measures to support the prices. To a very large extent, we've seen base metal complex thing bottoming out. And let me remind you, silver is a mix of gold, a precious metal as well as industrial metal. So this is going to be the year where I think silver, which has been a dead metal for many years now, is looking to give you some reasonable returns. The only challenge with silver is that you have to place your bet well in advance. It could be not giving you any kind of return for the next 3 6 months, but in a matter of 10 to 15 days, it could rally by about 15 20%. So park your money as and when you get a reasonable correction from a 15 20% upside. I would not be surprised to see silver prices about 82 to 85,000 over the next 12 to 15 months.
All right, just last question then, Navneet, to you, and that is, you did say that anyone having a long-term horizon should only look at gold at this point in time. Between gold and silver, if somebody is purely wanting to reap some investment gains over the next 5 years or so, what would you really recommend at this point?
Our wealth management division has a clear strategy that if you want to park 10% of your capital into precious metals, 7.5% could be gold and 2.5% could be silver. But from a couple of years perspective, I think 5% should be into gold and 5% should be into silver. As and when silver gives you about 25 30% kind of return over the next couple of years, you should be looking to dilute those investment and move back towards gold. So from a tactical perspective, 2 years, 5% parked in both gold and silver. But from a 5 year perspective, a larger chunk should be parked into gold. 7.5% could be gold and 2.5% could be silver.
All right. Well, many thanks, Navneet, for being with us on the show and sharing all these wonderful insights with all our viewers. Great to have you with us on Business Today.
If you like the video, do like, comment, share and subscribe.